Hey folks, David Frost, mystrategicforecast.com. You're looking at a chart of the GDX, which is the Gold Miners ETF, and I want to show you why I think we can bank 25 to 30% gains in this year. So let me explain. I've been telling my members that I was going to do some more work on GDX, and what I want to show you is some of the longer term pictures and some of the analysis that I've done to point me in the right direction, and then how I came up with some of the price targets. And I'm going to keep it simple. I'm not going to go through a lot of mathematical calculations. I'm just going to go over the big picture stuff. And here we have a daily chart of the GDX, and basically it's a bullish chart. I defy anybody to tell me why this isn't bullish. If you bought it down here, you caught this huge move, but if you were snoozing and you didn't catch this move, there's another move coming, and this is what I want to explain. Let's go over to the weekly chart. And I did some work, and I put some stuff on the chart, and basically what we have here is an inverse head and shoulders chart, okay? Or an inverse head and shoulders pattern. Here you have a left shoulder, here you have a head, here you have a right shoulder, and you're going to see direction go upward. This triggered this week. So we're in the 4th of July week. The week is closed out. The market finished yesterday. Today is the 4th of July. And my calculations tell me that this head and shoulders triggered this week. And of course, you know, if you go back down here and close here next week, this pattern's off the table until proven otherwise. But for now, what I think could happen, there's two scenarios. There's three scenarios. One is the pattern fails and it's off the table. Forget it. Pattern two is it just continues higher and continues upward from here. And then the option three would be we go sideways for a couple of weeks or 3 or 4 weeks, and then we go higher. And I'm kind of voting for that one because that'll give us a better picture and more predictability of what's going to happen. And as long as this pattern plays out, let's talk a little bit about how I get to the price target. So I'm just going to put one more line on the chart here. I know it's a little bit of a busy chart, but bear with me. So if I put this line here, okay, and this is from the neckline to the top of the head, okay? Now if I take this line and let me re-engage. Whoops, I'm sorry folks. Let me get rid of this. Remove line. Okay, so I want to grab this line and I want to re-engage this from the top of the neckline and extend it to where it would be if we did a mirror image. And this is what I talk about sometimes with the market symmetry. Okay, if we take the distance from the neckline to the top of the head and we fold it over above in this inverse head and shoulders formation, we get this area here, okay, at about $38. And $38, well, let's make this line a little thicker for you. Okay, let's change the color. Let's make it green. Okay, so now if we say where the top is 38, what else do we have at 38? Well, we have this area here, a lot of resistance in this area here. The market came down, we moved sideways for several weeks, and then we broke down again. So once we get back in this area here, we're going to have a lot of sellers. Now we may not exactly get to 38, but I just want to show you the maximum target price that I would have on this. Now let's go one step further and let's go out to a monthly chart. And let's see what we have. I have some Fibonacci retracement lines drawn in. And from this high here, which was 66.98, this was back in 2011. Okay, down to this low here, which was in 2013 in December. Okay, $20.24, 68.98. A 38.2% retracement is what? Lo and behold, $38.09. $38.09. Well, let's go back to the weekly chart and check our numbers once again. Where is this? $38. It's funny how that works. So you start to see how this common sense stuff unfolds if you know what you're looking at. I'm looking at price, I'm looking at pattern, and the last component, let's move this over a little bit, is time. And how we get to this area, in my opinion, is we have some sideways consolidation for a few weeks, and then we move higher. And that's my hope. So anyway, this is how I'm looking at the GDX trade. I think this is worth taking a trade here, even if you don't want to wait for the better signal. And where would you put your stop? You would put your stop below this neckline here, which you could call this, even this low here, 25.65. So I would be comfortable with a stop at 25.5 on a weekly close. That's only less than $1 from where we are now. So that's a huge risk reward. So here's your GDX trade. It's your inverse head and shoulders. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks.